Good morning, everyone. So, today we are going to do chapter 6 warehousing. This chapter is important from exam point of view. Why it is important? Because this was removed from the syllabus 3 years back, if I remember correctly. Now, this chapter has been reintroduced in syllabus. So, of course, for last 3 years, there was no question coming from this chapter because it was not in the syllabus. So, for the time being, it was removed from the syllabus. So it was in the syllabus, but it was removed from the syllabus. Now, according to the new study guideline, where ICI normally advise that these are the topics which are excluded from the syllabus, in that study guideline, you are going to see warehousing topic is missing. But previously, when you open any of the study guideline, you are going to find in exclusion topic warehousing. So that's why now it is in the syllabus. Previously it was there, and it is anyway one of the important chapter, because in case if you import, you have two options. One is home consumption, one is warehousing. So anyway, this is important topic. So chapter 6 warehousing. So in this chapter we are going to understand provisions related to warehousing. You people are anyway aware that importer can choose home consumption or can go for warehousing. In fact, if you recollect, we discussed there are how many type of bonds? Two type bonds, two type X bond into bond. Those are not bonds type. Basically, those are bill of entry type. So we discussed three bill of entries, three type of bill of entry. First one, normal bill of entry. So if suppose importer would like to go for home consumption, he is going to file normal bill of entry. Then in case if such person is opting for warehousing, then he need to give into bond bill of entry. Why it is called into bond bill of entry? I explain you that because in case of warehousing, importer is not going to pay the taxes. So importer is not going to pay the taxes. Okay, he is going to pay when he is going to clear it for home consumption. So that's why government interest need to be protected. So government is going to take bond along with security, so that government interest is well protected, because in case of warehousing is not going to pay the duty, import duty. So government is yet to get the import duty. So that's why government is going to take bond along with the security. That's why it is called into bond bill of entry when importer is going to opt for warehousing. Then from warehouse, later on he is going to clear. So he need to present then X bond bill of entry. So in case any duty liability is there, so he is going to pay that. Let's say goods has been exempted or goods has been exported, then he doesn't need to pay. So whether he pay or he doesn't need to pay, now no more bond required. So that's why if he already paid, let's say it is subject to duty and he already paid, so government got the revenue. So of course he is going to be discharged from the bond liability. So that's why he is going to file X bond bill of entry. So first one is bill of entry for home consumption. Then if suppose the importer is going for warehousing, then he need to file into bond bill of entry. And in case after he went for deposit in the warehouse, he is going for home consumption or maybe exporting, then he need to file X bond bill of entry. Okay. So this was the discussion earlier. So you people are aware that what is warehousing. Now from suppose importer opted for warehousing. Importer opted for warehousing. That okay, I would like to deposit in the warehouse. I would not. I doesn't want to go. I don't want to go basically for home consumption. So importer is going to deposit in warehouse. Now what next? Next is basically he can go for home consumption later. He can go for home consumption later. Or. Now recollect discussion in GST. We discussed Rule 95A on page number refund chapter 341. Rule 95A and circular number 10625 2019 GST dated 29/6/2019. So there are two type of retail outlets at international airport. One is duty free shops, another one is duty paid shop. So duty paid shop normally buy the goods from India only, indigenously they buy. Okay. Duty free shops they buy it from custom warehouse as well as tax paid indigenous goods. So this is basically buying from Indian supplier from India. They can procure goods from custom warehouse. So this warehouse only. Okay, so they can procure from custom warehouse. In that scenario, no refund because since they have not paid the duty. So basically, what importer can do? Importer can import, deposit in warehouse, and can supply to duty free shops. So in that scenario, he is not going to pay the duties. So he imported. So how it is going to work? He imported. He went for what? Warehousing. And from warehousing, what he can do? He can directly export. Let's say he's the trader. So imported from China and exported to US. So when he is going to opt for warehousing, he is not going to pay the taxes, duties. Okay. Then from warehouse, if he is exporting, then export other than 50 those 50 items, others items are not subject to export duty. So if he is going to export, then again no need to pay the duty. So on import he has not paid, on export also he is not going to pay. So why government is giving this facility that from warehouse you can directly export and no need to pay the import duty? Because if he is going to pay the import duty, then later on he is going to do export. Then in next chapter we are going to understand that duty drawback is there. Okay, so duty drawback is what? Basically refund of the duties paid at the time of import. So suppose he is doing export from the warehouse. So he imported, he had not paid the duty. Now since he is going to clear the goods for export, he is going to pay the duty. Let's say government say you pay the duty. But since he is doing export, so he is going to get the refund of that duty paid. Okay. So that is going to be cumbersome for the government as well as for the importer and exporter. Why? Because they are going to pay the duty and then they are going to claim the refund. So it is better to avoid such lengthy process. Government said, okay, in case from warehouse, if you are doing the export, no need to pay the duty. So if you are not going to pay the duty, of course, the question does not arise of the refund. Because refund is going to arise only if duty has been paid. So he can supply to duty free shop. Okay, then in that scenario, no need to pay the duty. Okay, so that's why it say duty free shop can indigenously or buy from custom warehouse. If they are buying from custom warehouse, no question of refund because they are not supposed to pay taxes and duties. Okay. So from home consumption or they can supply DFS. Now remember in last chapter, in previous chapter we also discussed about stores that provide for warehousing ship stores without assessment of duty, and it can be directly supplied then later on vessel or aircraft without payment of duty. So in case stores are warehouse, so no need to pay the duty, and later on if it is supplied to the foreign going vessel or aircraft, no need to pay the duty. So this means only in case of, So let me repeat it again. Okay. So basically, if it go for home consumption, then import duty need to be paid. ID means import duty. In case goods are supplied to duty free shop, no duties. Stores, no duties. Export, no duties. So imported goods warehouse can be exported, no duty. Supplied to DFS, no duties. Stores on foreign going vessel, no duties. Only in case of home consumption, duty is applicable. Now, why government this gives this facility? So that there is no formality of the refund. Now, there are two scenarios in case of export. Let's say exporter is just a importer as well as exporter, because he is going to import first, then he is going to export. So he's let's say importer is importing from China, then he deposited that goods to warehouse. Then from warehouse he can directly send to US without paying the duty, because he is exporting. He is not clearing those goods for home consumption. In case if you are clearing goods for home consumption, remember duty liability is always going to be there. So export direct means basically without any value addition, without doing any processing on the goods, no processing, or there may be processing also. Third, how the processing can be done in warehouse, because it is not his factory. So few of the warehouse has such facility where you can manufacture also. So you imported the raw material. We are going to see the provision in detail. I am just giving you brief knowledge. Raw material, and then you can manufacture it and do export without paying duty. What are the provisions? We are going to discuss in detail. Okay, so don't worry about it. So no processing means directly he is the trader, he imported and he exported. Then no question of duty. But he is doing the processing, not by clearing for home consumption. In the warehouse itself, he can manufacture, he can do the processing. Few of the warehouses provide such facility of manufacturing. So you imported plastic, okay, you would like to make the toys, so you can make that and you can export. Okay, so in that scenario, no duty. So whether as it is or you manufacture it, you do the processing and then exporting. But remember, no home consumption. Any goods which is going to be clear for home consumption, duty needs to be paid. So in case of warehousing, what is the option? Importer has home consumption, pay the duty. If he is supplying to duty free shop, no duty. Stores to foreign going vessel, no duty. And if he is exporting, no duty. Understood this basic things related to warehousing, so that I can start the warehousing chapter. Okay, so now let start the provision related to warehousing. Okay, section 2 clause 43. What is the definition of warehouse? Warehouse means a public warehouse license under section 57 or a private warehouse license under section 58 or a special warehouse license under section 58A. So there are three types of warehouse: public warehouse, private warehouse, and special warehouse. Okay, so three types of warehouse: public warehouse, public property; private warehouse, private. Okay, and special warehouse for special types of goods which require more security. Those goods are special enough. Okay, so section 2 clause 43 basically just say that there are three types of warehouses which is going to be appointed. Basically appointed means license under section 57 or 58 or 58A. That's all. Sweet and simple definition. Section 57, licensing of public warehouse. So who is going to be, basically you also know that tax officer or government, they are going to be authorized to give the license. Okay, so section 57 empower principal commissioner of custom or commissioner of custom that subject to the conditions they are going to give license for public warehouse wherein goods can be deposited. Section 58 empower principal commissioner of custom or commissioner of custom with condition that they can give license for private warehouse. Section 58A licensing of special warehouse. So again, principal commissioner of custom or commissioner of custom is authorized that subject to these conditions special warehouse license. Okay, now what is the difference between these three warehouses? Let's understand. So public warehouse, private warehouse, special warehouse. Nature of goods: any dutiable goods may be stored. Any dutiable goods may be stored. Dutiable goods imported by or on behalf of licensee may be deposited. So private warehouse basically imported by or on behalf of licensee. So private big time importer like Reliance is not going to go to public property. So he can apply for license, and let's say he ensure that only his goods deposited there. He's the big guy. Daily basis, hundred of consignment come. Reliance Industry, Adani. So it is better for them to deposit in their own warehouse. Basically not directly on. You can say that there is structure, but it is called private warehouse. So they are going to get the license. They can deposit their goods. Easier for them. Special warehouses, classes of dutiable goods notified by CBIC. Just correct in the book. These are CBIC. Okay. Because previously it was CBEC. Now it is CBIC. Are deposited in the special warehouse. So special class of notified goods are only going to be deposited in special warehouse. So what are those goods? Gold, silver, other precious and semi-precious metal, etc. Because their value is very high. So that's why they can be only deposited in a special warehouse. Now who is going to control the warehouse? So let's assume that this room is warehouse. So who is going to control? So custom authority is going to issue the order. Okay, deposit in the warehouse. So person is going to take that order and going to go to the warehouse owner, licensee, not owner, warehouse, the licensee who got the license. So he's going to say, okay, this is the order, show me the order copy. He's going to deposit that goods. So such goods is going to be in the custody of licensee. Okay, whether public warehouse or private warehouse. Custom is going to have record based control that such goods are deposited in the warehouse. Record based control, like in books, we normally show na, okay, this inventory is there. So record based control, physical control custom department is not going to have record based control in public or private warehouse. But in case of special warehouse, custom log based control. So where physical control is also of custom officer, they are going to lock the warehouse. And without their permission, no one can enter. Of course, in public and private also nobody can take away. Of course, they can enter, but they cannot take away the goods. But here nobody can even enter without getting permission of the proper officer. So in case of special warehouse, control is also going to be of custom authority. Remember, special goods, high value goods, gold, precious stone, etc. is going to be deposited in special warehouse. So it is easier to steal because someone can just put in the pocket and go away without paying the duty. So that's why, that is the logic behind custom control. Because you can go to the warehouse, you can put one bar of gold in your pocket and you can run away. Correct? And no duty has been paid. Because it is warehouse goods. So importer has not paid duty. Said to officer, sir, I would like to inspect the goods. He went inside, pocketed one. Or let's say if it is deposited in public warehouse, so there is always chance. There is always chance because both of them can say, okay, I am going to take away. You just say it is robbery. But custom is going to suffer, government is going to suffer. Okay. So here it is record based control where physical control is going to be of licensee. Here custom is also going to physical control. So public warehouse, private warehouse, special warehouses. Okay, so 3 type of warehouses. And who is going to give the permission? Principal, commissioner of custom or commissioner. Of course, they are going to put the condition also. They are just not going to say, okay, permission granted. They are going to say, okay, you need to give this report. Okay, this is the area, etc. Everything they are going to put it at the time of granting license. They are going to put the condition. Now section 58B. So principal commissioner or commissioner has given license with the condition. But licensee is very smart. He thought he got the license, he can do anything. So let's say, I'm taking example. No goods should be removed from the warehouse without the permission of the custom officer. Why? Very simple reason, because government is yet to get the import duty. So without custom officer permission, you cannot remove the goods. Correct? Logical enough. But such person is too smart, the licensee. He is removing the goods. So basically you can say he is defrauding the government. So what is going to happen? Government is going to take action against him or not? Or they are going to say, okay, you continue. We are not going to withdraw your license. Okay, so there is, of course, section 58B. Empower principal commissioner of custom or commissioner of custom that they can cancel the license. They can cancel the license if there is a breach of conditions by the licensee. But before cancelling, if you recollect, in chapter 9 of GST registration, we discuss about cancellation of registration. So this take time. So what officer can do there? He can suspend the registration. So here also similar provision is there, because officer need to investigate the matter, need to do proper inquiry before going for cancellation. Because cancellation is too harsh, which you cannot just take decision in 1 minute. So of course you need to prepare the document, you need to do the inquiry. So it is going to take time. So what these people are going to do, department people, they are going to suspend the warehousing operation during the pendency of any inquiry. So during this suspension period, no new goods to be deposited. Because normally there may be every day coming new goods from the port for depositing in the warehouse. So if commissioner of custom, principal commissioner suspended the warehousing operation, so before cancellation they are going to suspend it. So if they have suspended the operation, warehousing operation, then no goods is going to be deposited in that warehouse until their inquiry complete, until they revoke the suspension or they can even cancel. Okay, so they suspended the warehousing. Okay, so no new goods. And after inquiry is complete, of course, before taking the decision of cancellation, they are going to follow natural justice principle. What does it mean? Opportunity of being heard to whom? License. So they are going to give opportunity of being heard to licensee. Licensee, of course, is going to give all the gyan. Sir, I have not done this, vagara vagara. I am not going to do in future. Or there may not be any breach of condition, but custom officer is thinking there is a breach of condition. So he is going to justify. If justifiable principal commissioner or commissioner they are convinced, then they are going to revoke. Otherwise, they are going to cancel it. In case they take the decision to cancel the warehouse license, then what is going to happen now? Goods already deposited there, because in suspension period no new goods are going to come, but goods are already there now. What is going to happen to that? So this say goods to be removed within 7 days of cancellation to another warehouse. So what is the option now in front of importer? So go for home consumption within 7 days. Choice is given to him. Deposit in another warehouse within 7 days. Or what it can do. If suppose he wanted to export, he can also export. So within 7 days, home consumption, export or deposit in the warehouse. Another warehouse. Okay. Section 59, warehousing bond. What is this, sir? Warehousing bond. What I said to you initially, that government is going to protect its revenue. How they are going to protect? Because on warehouse goods no duties has been paid. If importer is directly going for home consumption, government got the import duty. No issue. Custom duty has been paid. No issue at all. Government got the duty. Whatever he would like to do with the goods, let him do, because he is ultimately the owner of the goods, importer. But if goods are warehouse, government are yet to get the duties. So it is warehouse. Now let's say someone can install or license can do anything. So government is yet to get the duty. So government is of course going to protect its interest. So what is the way out? Of course, what they are going to do, they are going to take the indemnity bond along with appropriate security. So they are going to take indemnity bond with appropriate security. How much amount indemnity bond they are going to take? So they are going to take thrice of the amount, thrice of the duty amount. How much they are going to take? Thrice of the duties. Sir, but in case of warehousing, duty need not to be paid, but it need to be assessed so that thrice amount can be calculated. So officer is going to say, okay, your duty is lump sum 100 rupees, so give me 300 rupees bond. Now what is the logic behind thrice? Why not it is only once or twice? Why it is thrice? Because government would like to protect its revenue more than 100%. Why? Let's say, so let's go back to chapter 1. So in chapter 1, section 15. So if it is for home consumption, then date of presentation of bill of entry or date of entry inward is going to be the relevant date for determining the rate of duty and tariff valuation. But in case goods are deposited in a warehouse and later on it is cleared for home consumption, then what is going to be the date? The date of presentation of the X bond bill of entry for home consumption. Okay. So let's say when officer ordered for warehouse, that day duty was 10%. Later on, government increased the duty on the goods 20%. So today he is going to assess, because he is going to take the thrice of this amount on the basis of the duty. But later on, government has issued the notification and said now on such goods duty has been increased. Apart from that, there may be interest, liability, penalty, etc. So government need to cover everything, na? So that's why they are going to take thrice. Okay, that is the logic behind the thrice of the duty amount involved. Plus, they are also going to take the security, so that penalty, interest, additional duty, everything taken care of. Okay, so in worst case scenario, they are just trying to protect their interest. So there are now two types of bond. There are two types of bond. So bond we discussed thrice of the duty amount. There are two type of bond. One is consignment bond. Another one, general bond. First one is consignment bond. Another one, general bond. What is the difference between both the bonds? So consignment bond, you can see by name itself, it's a consignment. So this bond is basically consignment wise. So you imported 10 consignment. So 10 into bond bill of entry. So bill of entry wise bond. Okay, individual bond. Consignment wise bond. Okay. So you are a smaller importer. That's why consignment bond. But I am the big time importer. Daily basis I import. An officer know me very well. Oh, Amit Jain is the big time importer. So now, for me, what they are going to do? Sir, do one thing. You are big time importer. No consignment wise bond, because too much paperwork you are going to do. We are also going to check. Too much burden on us. So you execute one general bond for the period. So I can execute one bond for 6 months. So one general bond, and maybe 100 consignment, 200 consignment, or 300 consignment, they are going to be covered under this. So no need to give individual consignment wise bond. I am going to give a bond, general bond, for a period. So this is the gap. Consignment bond, consignment wise, general bond for a period, covering all the consignment. Okay. So basically, importer, exporter, they are going to give the bond and they are going to say, okay, we are complying with the all, we are going to comply with the all the provision related to custom law, and to pay or before the date is specified in the notice of demand all the duties and interest payable under section 61 subsection 2, and to pay all penalty and fine incurred in the contravention of the provision of custom law in respect of such goods. So they are going to bind themselves by giving this bond. Of course, in case of general bond, ACDC is going to see the past history, everything. Then only they are going to decide that this is going to be the amount for general bond. They are going to see what is basically past history, what can be. They are also going to estimate the future import, etc. Taking the information, and they are also going to estimate. Then they are going to decide. Okay. If suppose goods are transferred from one warehouse to another warehouse, let's say warehouse license are cancelled. Warehouse license is cancelled. And that person choose to go for deposit in another warehouse. So that bond is going to be continued. Okay, because he has not opted for home consumption. So bond need to be continued. So bond is not going to be impacted because of this decision of him from one warehouse to another warehouse. But let's say in case warehouse goods are sold. Warehouse goods can be sold, na? Or not? Can be sold, correct? Schedule 3. Remember para 8. Schedule 3, Para 8, CGST Act. Warehouse goods if sold. If sold, what is going to happen? It is neither supply of goods nor supply of services, not subject to GST. So if it is sold, now new owner came. And remember, we discussed previously that in case of high seas sales or any sale which is going to happen before the goods are cleared for home consumption, now the new buyer is going to complete all the formalities. He is going to step into the shoes of original importer and going to complete all the formalities, including payment of duties. Because in case of warehouse goods, no duties has been paid. So now this new buyer, new owner is going to pay the duties. So now that bond has any value because that original importer already sold the goods. So if suppose in future government go to him and say, please pay me the duty, he is going to say, sir, I already sold the goods. So where government interest is protected. So in that scenario, what government is going to do? In case goods are sold to another person during the warehousing period, new person, we are going to say him transferee. So transferee now will have to execute the bond and furnish prescribed security. Government is smart enough. They are of course going to protect their interest. So now the new person, new buyer is going to give the bond along with the security. Okay. Section 60, everything is done. Bond given, security given. So what officer is going to do? Under section 60 is going to say, okay, order passed. Deposit in the warehouse. So under section 60, he is going to pass the order for permitting the deposit of the goods in the warehouse. Okay, this all section 60. Any doubt till now? Okay. Section 61. Period for which goods may remain in warehouse. So goods deposited in the warehouse. So there is any time frame that importer can keep that goods in warehouse, or there is no time frame. After 50 years also he can clear the goods. So there is any time frame or not? Whether he can deposit for 6 months, 1 year, 2 years, 3 years, or he can deposit for infinite time. So let's understand the time period for which he can deposit the goods in warehouse. Section 61. Period for which goods may remain warehouse. So time period for which different class of goods may be warehouse and interest provision. What is going to be the interest? So in this there are two categories of the importer. So in this provision you are going to see two categories of importer. First one is importer is basically 100% EOU, ESTP, STP. Okay. So 100% EOU, ESTP, STP normally what they do, they are going to import the raw material. So this 100% EOU or ESTP, STP, normally what they do, they are going to import the raw material. Normally they are going to import the raw material, going to do the processing, and then they normally export. So they normally export, okay, correct? Normally they export. So government said in case of 100% EOU, ESTP, STP, if they are depositing, so they may be depositing basically two type of goods. One is the capital goods, another one is other goods other than capital goods. So capital goods or other goods, capital goods can be deposited in the warehouse till the clearance of such goods from the warehouse. Why capital goods they deposit? Because they would like to carry out the manufacturing. So they basically they installed one machinery there in the warehouse where the manufacturing is possible. So what they can do, they can import the raw material, they can process those raw material and manufacture new product, and that new product they can export. So capital goods for for processing, of course they require capital goods in the form of, let's say, machinery. So machinery, no time period till the clearance of such goods from warehouse. They can keep the machinery there. No time period for that machinery. Maybe 10 years, 20 years, 30 years. Capital goods, no time period. In case who imported EOU, ESTP, STP. Other goods also till the consumption or clearance of such goods. Till they consume those goods or clear. Okay, maybe clearing in the domestic. They can also go for home consumption. In that scenario, they have to pay the duty. If they are opting for home consumption, if they are not exporting, they are opting for home consumption, then in that scenario they have to pay the duty. Okay, so till the consumption clearance of such goods, they can keep other goods also in the warehouse. So basically for EOU, ESTP, STP, no time period. It can be there for 10 years also and no need to pay the interest. No time period for keeping the goods in the warehouse and no need to pay interest. If the importer is EOU, STP, STP. Now what is going to be for other importer? So there is a time period. They can keep the goods in the warehouse for 1 year from the date of making order by the officer. So under section 60, officer is going to make the order. Okay. So let's say he made the order on 1st February that please deposit this in warehouse. He got the bond security, so he is going to pass the order. You can deposit this in the warehouse. So from that date, importer can keep those goods in warehouse for how much period? 1 year. That is going to be the maximum period allowed for warehousing. How much period? 1 year. So importer can deposit from that date, from 1st February when he made the order, 1 year. Okay, within 1 year, he need to clear for home consumption, or he can export or supply to DFS. That is his call. Okay, but that is the maximum period allowed. Okay. Now interest is going to be payable by such person, other importer. So up to 90 days, so rate of interest is basically fixed, 15% per annum. 15% per annum. Amount on which interest is payable. Amount on which interest is payable, whatever duty he is supposed to pay. Let's say he is going for home consumption, then he is supposed to pay the duty. So interest, always I said, is basically product of duty. This I explained you in previous chapter also. So it means what? If no duty, then no interest. Correct? No interest. So up to 90 days. So maximum permission for him is 1 year. So he can keep in the goods, of course, in the order. He is also going to tell to the officer that for how much period he would like to deposit. So let's say he is opting for 60 days only, then in order, officer is going to say for 60 days. But maximum time period is 1 year. So let's say he opted for 1 year, officer gave him 1 year permission, but after 90 days he need to pay the interest. He got the permission for 1 year, but after 90 days he is supposed to pay the interest on the duty. So up to 90 days, if he go clear the goods, no need to pay the interest. But beyond 90 days, even though he got the permission of 1 year, he is supposed to pay duty. Duty on what? Duty on what? No, sorry, interest. He is supposed to pay the interest on duty. Interest on what? On duty amount. Interest on what? On duty amount when he is going to clear the goods. When he is going to pay? When he is going to clear the goods, of course duty is going to be calculated, and if the goods are deposited in the warehouse for more than 90 days, then beyond 90 days he is going to pay the interest, not up to 90 days period. So he deposited, let's say, for 9 months. So beyond 90 days means up to 90 days he is not supposed to pay any interest. After we are going to calculate beyond 90 days, how many days, on that he is supposed to pay interest at the rate of 15% per annum on duty amount. But let's say when he deposited that time, it was subject to duty, but later on government exempted the goods. Later on government exempted the goods. So section 16 say, no, section 15, sorry, goods cleared from a warehouse under section 68, date of presentation of the ex-bond bill of entry. So when he presented the ex-bond bill of entry, that day no duty, because government exempted. So whether he is supposed to pay interest? Of course no. What I said to you in previous chapter also, duty is on, interest is on duty, because he is not supposed to pay duty, so of course no interest. Because you are going to calculate interest on duty only. No duty, no interest, even though he is keeping the goods beyond 90 days, because duty is 0. If you apply any amount, any percentage on this, it is going to be 0 only. Correct? Example 1. So remember, for ESTP, STP, 100% EOU, no time period, whether for capital goods or other material, no need to pay interest. But for other importer, 1 year time period is there, and beyond 90 days he is supposed to pay 15% interest on duty. Example 1, ICI example. X, an importer other than 100% EOU, STP unit, ESTP unit, imported some goods and deposited them in the warehouse on 12/4. These goods were re-exported without payment of duty on 15/8. So it is re-exported without payment of any duty, because on export there is no duty, if suppose those items are not subject to export duty. So discuss whether any interest under section 61 subsection 2 of the Custom Act need to be paid by X. Of course no. So he deposited in the warehouse on 12/4, okay, and he cleared 15/8, so beyond 90 days. So he is supposed to pay duty if suppose he is going for home consumption and there is duty liability. But let's say goods is exempted in the meantime, or he is exporting, then no duty, no duty, so no interest. So no duty, no interest, and in fact this is the Supreme Court judgment also. Very important case law, Pratibha Processor versus UI. Example 2, ICI example again. Comment on the validity of the following statement. Goods other than capital goods intended for the use in any 100% export oriented undertaking can be warehoused only till the expiry of 5 years. Is there any time period? What I said to you, there is no time period. What I said to you, there is no time period. So this statement is invalid. There is no time period mentioned for 100% EOU. Interest-free period of 90 days under section 61 subsection 2 in respect of warehouse goods not intended for being used in 100% EOU commences from the date on which an into bond bill of entry in respect of such goods is presented. No, not at all. When officer is going to give order. So into bond bill of entry presented on 1st February. Officer give order on 2nd February that okay, you can deposit in the warehouse. So 1 year is going to be counted from this 2nd February when officer give the order. Now section 64, owner's right to deal with warehouse goods. So what owner can do with the warehouse goods? The owner of any warehouse goods May after warehousing the same, he can, of course, he would like to see the goods, so he can see it, inspect the goods. He can deal with the containers because there may be loss otherwise. So deal with the containers to prevent loss or deterioration or damage to the goods. He can also do the sorting of the goods and show the goods for sale. Warehouse goods can be sold. So buyer, without seeing the goods, why he is going to buy? So that's why he can also show the goods to the buyer. Okay, prospect. So section 64 basically give owner what he can do with the warehouse goods. Section 65, very important section. Manufacture and other operation in relation to goods in warehouse. So I said to you that you can do the manufacturing. And in fact, ESTP, STP, those people, they normally put the machinery, etc. in the warehouse so that they can do the manufacturing. They don't need to pay the duty. So import, they are going to import the raw material. They are going to opt for warehousing. In fact, let's say they are also importing German machinery for manufacturing. They are going to opt for warehousing. In that warehouse, there is going to be a structure for manufacturing. Let's say it may not be a sophisticated manufacturing process. Plain vanilla process is there. So easily it can be manufactured. Otherwise, if it's sophisticated, then you need to set up entire factory. So they are going to manufacture and then they are going to export from there. So no need to pay duty. Okay. So manufacturing. So owner of the goods may manufacture finished goods using said imported goods. So it's not like only EOU STP, other can also do. Okay. So, but if he is manufacturing, so there may be waste. What is going to happen to that waste? And in case after manufacturing it is getting cleared to home consumption, then what is going to happen? May not be it exported. After manufacturing, you can also go for home consumption, or there may be waste during the process of manufacturing. What is going to happen? So owner of the goods may manufacture finished goods using said imported goods. He has to pay duty levied on imported goods if FG is cleared for home consumption. So whatever goods he is importing, let's say he after manufacturing he is going for home consumption. The finished goods home consumption. So he is clearing those finished goods for home consumption in India. He is basically going to sell in India. Then whatever goods he imported, pay duty on that. But let's say if finished goods is exported, then no duty, as I said to you. But let's say waste is there. So he imported 100 kg A item, 100 kg B item, 100 kg C item, and he manufactured 275 kg of ABC. So there is a waste of 25 kg. So 275 kg he is exporting, no need to pay duty. But what is going to happen to this waste of 25 kg? So 275 kg he is exporting. So up to 275 kg imported goods only out of this 300 kg is going to be exempted. What is going to happen to 25 kg? So he has option. That waste, what is going to do? He can destroy that waste. He is going to say, okay, I am destroying it, no issue. So no need to pay duty. So that 25 kg he can destroy. So no need to pay duty. But let's say he is not destroying, he is clearing for home consumption. If he is clearing for home consumption, then on that waste portion he has to pay duty. Okay, then he has to pay duty on that 25 kg. And if he is destroying, then no need to pay the duty. Okay, so he has two options. No fees is to be paid to custom for supervision of manufacturing facility under bond. Principal Commissioner Commissioner empowered to license facilities. Okay, because all the facilities means all the warehouse may not have this option. Okay, so they are going to see it. Yes, manufacturing is possible. They are going to see the facility asset. Example 3. I say example again. Let us take this, the case of cutlery manufactured out of imported high-speed cutting steel strips. Locally procured plastic is used for providing handles to the cutlery, knife, fork, etc. So basically, person would like to manufacture cutlery. So he imported high speed cutting steel strips and locally procured plastic he is also used. In a batch process, 200 kg imported steel strips and 100 kg plastic is issued for the manufacture of the cutlery item. 400 gross knives are manufactured and they are cleared for home consumption. So they are cleared for home consumption. The steel strip content in the above knives is 178 kg. The weight of plastic handle is 85 kg. The waste is in the form of saving etc. The total waste of the weight of the waste is basically 37 kg. 200 kg of steel, 100 kg of plastic. So 300 kg total raw material. Okay. And 170 kg is there in the finished goods. Steel. 85 kg is there plastic. So balance is 37 kg is waste. So how much is the steel content? So steel content is basically 22 kg. So import duty of custom at the rate applicable to steel strips should be collected on the waste. Okay, so that is going to be collected. The alternative, so if suppose they are directly selling it directly to India only, then 100% import duty need to be paid. But if suppose it is exported out of the country, if exported out of country, then what manufacturer can do? Manufacturer can destroy the waste. So no need to pay the duty. Okay, then he is not going to require to pay the duty on steel strip. He is exporting and destroying it. If he does not destroy it, and let's say he is going for home consumption, then whatever steel strip he is going for home consumption, which is in the form of waste, he is going to pay duty on that. Okay, so waste, if he is destroying, then no need to pay the duty. If he is going for home consumption for that waste, so he need to pay duty on that. Another example 4, I say example. Let us now take an example where the final product are both exported and cleared for home consumption. The question of appropriating the waste will have to be decided first. The imported raw material is rubber. The end product is motor vehicle tire. The additional material used are beading wire, tire cord, warp sheet, and chemicals and mineral oil. Total quantity of rubber issued 1500 kg. Okay, so this is the raw material. Weight of bead wire used 10 kg. Weight of tire cord warp sheet used 180 kg. Weight of chemical used 4 kg. Weight of mineral oil used 16 kg. So basically total raw material issued. So 1500, 10, 190, 1690 and 20, 1710 kg. Okay, if we put to the total of this. Total number of tires manufactured 100 piece. Weight per tire 16.5 kg. So total tire weight is basically 1650 kg. It means 60 kg is the waste. Okay, because total raw material weight is 1710 kg, 1710, and tire weight, which is basically manufactured finished goods, is basically 60 kg, 1650, 16.5 kg one tire into 100 tires they manufacture. So basically 1650. So 60 kg is waste. Now let's say out of 100 wire, sorry, 100 tire, 25 pieces are sold in domestic market and 75 exported. So basically home consumption 25 pieces and 75 exported. So now the wastage related to tires exported 60 kg, 60 kg was the waste into 75% exported, 25% home consumption. So home consumption anyway including the finished goods waste is taxable. Okay, on that duty need to be paid. Whatever is related to export we need to see that. So 60 kg into let's say 75% is exported. So 45 kg waste is related to what? Export. So 45 kg is there. Now in 45 kg waste all the waste are there like rubber is also there, bead wire is also there, this is also there, mineral oil is there. But in this imported item is only 1500. Okay, the imported item is basically 1500 kg out of 1710 kg. Okay, rubber. So what we are going to do, 45 into 1500, which is rubber, divided by 1710 total raw material. So 39.5 approximately is going to be rubber, imported raw material, on which duty has not been paid. So if we suppose destroy entire that 45 kg, then no need to pay the duty, very good enough. But let's say if it is gone for home consumption, okay, then duty needs to be paid. Let's say in this scenario also for home consumption, what is going to do, 15 kg waste is there, out of that rubber is 13.2 kg. So on 13.2 kg compulsory, whether he destroy or not, he need to pay the duty, because that 25 pieces went for home consumption. Okay, so on this waste, compulsory duty need to be paid on the waste also. Okay, and in this scenario duty need to be paid if it is gone for home consumption, if such waste is gone for home consumption. Example 5, I say example, if manufacturing operation are carried out on warehouse goods and finished product are cleared for home consumption, then appropriate duty of customs should be levied on the quantity of warehouse goods contained in the waste or refuse arising out of the such manufacturing process. Examine the validity of said statement. Of course it is valid, because on waste portion, if it is not destroyed, then duty needs to be paid. Okay. Section 67, removal of goods from one warehouse to another. So with the permission of proper officer, importer, of course, the owner of the goods can remove goods from one warehouse to another, subject to such condition as may prescribe for the due arrival of the warehouse goods at the warehouse to which removal is permitted. Because uh, of course that officer need to update the record that okay, this warehouse goods has been removed from A warehouse to B warehouse. So in his record it is showing A, so he need to ensure he is giving the order that actually it is all deposited in warehouse, B warehouse. Because if suppose importer is saying I am going to deposit from A to B, but in between he sold the goods in the Indian market without paying the duty, correct? So that's why he need to ensure officer is that okay, it actually deposited in B. So there is going to be the acknowledgement by the licensee of this, and sometime also it is going to inform, let's say jurisdiction commissioner are different for A and B, so it is also going to be intimated. Okay, any doubt till now? One of the previous doubt, basically I don't take previous doubt, but okay, because this is warehousing chapter, that's why I'm taking it, that thrice amount, if government is taking, then they are going to refund it. Naveen, they are not taking, they are taking the bond along with security deposit. So question does not arise of refund. It is bond, indemnity bond, along with the appropriate security, let's say in the form of bank guarantee. So they are not taking the duty amount three times. They are just asking importer to sign up the bond along with the security. So question does not arise of refund because no duty has been paid. So this bond along with the security has been taken to protect interest of government. So it is bond amount. It is not actually paid. Okay, so no doubt. Section 68, clearance of warehouse goods. Now from warehouse, you can opt for home consumption, or you can opt for export, or you can even supply stores, if suppose it is stores, to foreign going vessel or aircraft, or you can supply to duty free shops. Correct? So now I hope you know all the interlinking. That time you were not aware, sir, why this, what is this custom warehouse, which you are explaining in the refund chapter of GST. So now you may have easily linked this. So you can easily now link this. So no issue. So section 68, clearance of warehouse goods. So importer has given bond. Now he would like to go for home consumption. So remember section 16, sorry, section 15, subsection 1, clause B, goods cleared for home consumption. So he need to file X bond bill of entry and he need to pay the duty. Correct? What is going to be the relevant date for duty? Date of duty and tariff valuation is going to be the date of presentation of X bond bill of entry for home consumption under that section. So this clearly says goods cleared from a warehouse under section 68. So what is 68? Clearance of warehouse goods for home consumption. The importer of any warehouse goods may be cleared from the warehouse for home consumption only on the fulfillment of the following condition. Very simple. First, he need to file the X bond bill of entry. Okay. Then he need to pay import duties, penalty, interest. If suppose it is beyond 90 days, then remember interest need to be paid. So he need to pay that duties, etc. Then once the officer is going to see, okay, we received the duty, interest, penalty, whatever he's supposed to pay, we got all the sum, then he's going to pass the order. Okay, take your goods for home consumption. So he's going to file bill, X bond bill of entry. He's going to pay duties, interest, penalty, whatever he's supposed to pay. He's going to pay that. Then officer is going to say, okay, after verifying, okay, they got everything from such importer. Order is going to be passed to clear the goods for home consumption. Very simple. So this is section 68. So now normally orders are electronically. Now previously everything was physical. Now everything is online. Relinquishment of title. So warehouse goods he can also relinquish. Means he can say, sir, I don't want to clear the goods. Basically you become the owner. Government become the owner. So this similar concept we discuss in section 23 also. Abandonment or relinquishment on page number 27. Chapter 1, correct? Section 23. So in that scenario, so he can do it up to what period? At any time before an order for clearance of goods for home consumption has been made, and upon payment of penalties in respect of the goods and on such relinquishment, he shall not be liable to pay duty thereon. So he can relinquish, then he doesn't need to pay duty etc. if he is relinquishing the title. I explained you previously in section 23. I'm not going to repeat. When person can opt for this, market value went down, so he thinks duty liability is more, so let's relinquish. But relinquish is not possible. Similarly, here also it is not possible if any offense has been. So here also we discuss offense, then relinquish, abandonment not possible. So here also in that scenario, relinquishment of his title not possible. Okay. Otherwise, he can relinquish and he shall not be liable to pay any duty. Section 69, clearance of warehouse goods for export. So this is for home consumption. Officer is going to pass home consumption order. Once importer is going to file X bond bill of entry, he pay all the duty amount, tax, interest, whatever payable in duty, interest, penalty, etc. Then officer is going to pass order. Once he paid, okay, then he can go for home consumption. Now warehouse goods can be also directly export. In that case, there is no need of making the payment of duty. So any warehouse goods may be exported to a place outside India without payment of import duty if you need to file the shipping bill or bill of export in the prescribed form or label or declaration accompanying the goods as referred to in section 82 has been presented in respect of such goods. So you need to file shipping bill or bill of export. The export duty, if suppose such goods are subject to export duty, fine and penalty, then that need to be paid. Then afterward, proper officer is going to give order, okay, export it. So again, order may be electronically. But this section 69 also say one thing. If central government is of the opinion that this goods, so why importer is exporting, so that he doesn't need to pay import duty. So such importer imported such goods, opted for warehousing, then later on he is applying for export, file shipping bill or bill of export, and let's say proper officer exported, proper officer gave permission. So he is basically showing that it is exported, but it may come back to India. It may come back to India. Okay. So importer basically playing smart. So it may be smuggled back to India. So that's why central government, if suppose they think that such type of specified description, it is going to be exported, later on it is going to be smuggled back, then they again issue the notification in the official gazette that such goods shall not be exported to any place outside India without payment of duty, or may be allowed to be so exported subject to such restriction and condition as may be specified in the notification. So they can issue notification say that such goods cannot be exported without payment of duty, or they can put the restriction up to them. So this section basically also empowers central government that in case they have doubt that such goods is going to be exported and going to be smuggled back, then they can issue notification in the official gazette and can say such goods is going to be exported only on the payment of duty, and or with some restriction they can put. Section 70, allowance in case of volatile goods. So few goods are subject to, let's say, evaporation. So it is naturally they evaporate. Like you know that petrol, diesel, they evaporate time pass. Basically at the time passage they evaporate. Correct? Petrol, diesel. In fact, this I think alcohol also evaporate. Okay, I'm not sure, but no, alcohol does not evaporate. So all the petroleum product normally they evaporate. Apart from that, there are also category like kerosene, furnace oil, all these are evaporate. Okay. So allowance, section 70 give them allowance in case of such volatile goods because naturally it evaporate. So ACDC is empowered to remit the import duty leviable on such shortage or deficiency of the warehouse goods on account of natural losses. So let's say 100 liter became, because it is warehouse. So when it was warehouse, that time it was 100 liter. Later on, because of the natural reason evaporation, it gone down to 90 liter. So on 10 liter, import duty is going to be waived off. Remitted means waived off. Okay, by ACDC. So of course not on the all goods. So they have the list ready. So like petroleum product like ATF, motor spirit, mineral turpentine, acetone, methanol, raw naphtha, etc. Okay, kept in tanks subject to atmospheric pressure have a tendency to evaporate during long period of storage. Similarly, wine. Okay, wine also evaporate. That's why I was thinking that wine also evaporate. So wine, spirit, and beer are imported under over-roof condition in wooden casks stored in bonded warehouse. They are also volatile in nature, and there is considerable evaporation loss during the storage. So ACDC has been empowered to waived off such or remitted basically duty on such natural losses. Now there is a gap between section 23 and section 70. I highlighted also in the book. So in section 23 also remission is there. Section 23 is what? Remission of duty. What I also explained you the difference between the abatement and remission term. So remission basically waived off. So there is a duty remission, but it is basically on lost destroyed. So this is not because of the natural loss evaporation. Loss destroyed may be because of the natural reason, but that is because of the flood, fire, etc. Flood is natural, fire is of course not. It may be man-made. So there is a distinction between section 23 and 70. Section 23 where the goods are lost before clearance for home consumption is made. Okay. where section 70 provide for remission of duty in respect of loss during warehousing only. So this is only in case of warehousing. It is not on the port. It is on the warehousing notified by the central government in under this section. Therefore, granting remission for loss during transit between two warehouses does not render section 70 redundant. Okay. Section 71, goods not to be taken out of warehouse except as provided by this act. So whatever goods are warehouse, it cannot be taken out until unless, let's say, if you are filing for export bill of entry, you paid the duty, order has been given by officer, then of course you can take away. But without any clearance, you cannot take away any warehouse goods, maybe for home consumption or for export, until unless according to the provision officer give you permission. Section 72, goods improperly removed from warehouse, etc. So it cannot be removed. So if suppose you are removing goods contravening section 71, where any warehouse goods have not been removed from a warehouse at the expiration of the period during which such goods are permitted under section 61 to remain in warehouse. So let's say goods can be only kept in the warehouse for 1 year for other than EOU, STP, then if you are not removing in 1 year, so it is going to be called that improperly removed from the warehouse. Where any goods in respect of which a bond has been executed under section 59 and which have not been cleared for home consumption or exportation and are not duly accounted for the satisfaction of the proper officer. So not cleared for home consumption or exportation, okay, or there may be any other reason, proper officer is not satisfied. So we are going to say according to section 72, if it is removed, actually removed, or if it is not removed, time period is 1 year. If it is not removed, so we are going to say, so here it is removed, here it is not removed within 1 year, okay, 1 year, let's say time period, then we are going to say improperly removed. So the goods are improperly removed. So in case of improper removal of warehouse goods, what is going to happen? The proper officer may demand the full amount of import duty chargeable on such goods along with interest, fine and penalty payable in respect of such goods. If any owner fail to pay any duty demanded, then the proper officer is authorized to detain and sell such portion of goods as he may deem fit. So in this case, when we say that goods are improperly removed, actually it is removed or not removed within 1 year, which I took the example, then officer is going to say it is improperly removed, pay the import duty, interest, penalty, whatever is applicable, please pay everything. Okay, if owner does not pay, then he is going to detain the goods and going to sell such goods from which he can recover the duties and other dues. Okay. Section 73, cancellation and return of warehousing bond. So if ownership is transferred, then new transfer is going to furnish. So then what is going to happen? That previous bond is going to be returned back or cancelled. Okay. Section 73, a custom and removal of warehouse goods. So remember, all the warehouse goods going to be in custody of the person who has been granted a license, whether public warehouse, private warehouse or special warehouse, until they are cleared for home consumption or are transferred to another warehouse or are exported or removed as otherwise provided under this act. The responsibility of the person referred above who has a custody means licensee, he is going to be the responsible for warehouse goods. Where any warehouse goods are removed in contravention of section 71, means officer is not given permission but it has been removed. Okay, contravention of section 71. But remember, when goods are not cleared within 1 year, then it is improper remove, but still the goods are there. But here it has been removed physically. It is taken out. Then the licensee shall be liable to pay duty, interest, fine and penalty without prejudice to any other action that may be taken against him under this act or any other law for the time being in prison. So basically section 73 is say about custody I have granted to the licensee, not to the importer, correct? So licensee is in charge of that goods until officer say without officer order he cannot remove that goods from the warehouse. So this is licensee obligation. Okay, it is his responsibility. In case any goods has been removed, officer has not given permission and the goods has been removed. So of course, who is going to pay the duty and other penalty, etc. in case license is supposed to. And in fact, other action can be also taken. Okay, so this is section 73A. This complete chapter. So now let's do question and answer. So difference you people are aware about in public bonded warehouse and private bonded warehouse, including special warehouse also. So public bonded warehouse section 57 is going to be applicable. Commissioner or Principal Commissioner of Custom is going to give license under section 57. Here it is section 58. Okay, it is for anyone public, and this is for by on behalf of the licensee may be deposited goods. Question 2. Write a brief note on change made by Finance Act 2016 with reference to amount of warehousing bond and security under section 59 of Custom Act 1962. So now it is basically thrice. Okay. Previously it was twice. Now it is thrice. Question 3. Consider the following cases and compute the amount of import duty, if any, payable in such case. Used in manufacture of steel spoons, 19,800 of steel spoon manufacture and 200 kg of steel waste has arisen during manufacturing. The said 800 kg of steel spoon is exported out of India. So basically whatever they imported, steel imported, and they made 19,800 kg of steel spoon. Okay, so 200 kg of waste, and this 800 is exported back. Okay, so 200 kg they can destroy. So no need to pay the duty. If they are clearing for home consumption, okay, then they need to pay the duty. On that, it is going to be assumed that such waste is only imported. What will be your answer if in case A, about the entire 800 of steel spoon is sold in domestic market, then entire 20,000 kg is subject to import duty? What will be your answer if in case 50% of the steel spoons are exported out of India and balance are sold in the domestic market? Then 50%, basically 10,000 is subject to duty, and balance 9,900, 10,000 which is exported. So out of that 100 kg may be related to waste. So that waste need to be destroyed or duty need to be paid on that. Question 4. With reference to Custom Act, explain briefly relevant date for determining the rate of duty levied on imported material contained in waste or refuse. So this is very important question, that on which date you are going to do it. So this is according to section 51. You need to go through this. Okay, so do this question, that which is the relevant date. So if goods manufactured in bond are exported, import duty on the quantity of the warehouse goods contained in the waste or refusal shall be remitted, provided as such waste or refuse is either destroyed. Duty is going to be paid if suppose it is not destroyed, then it is going to be assumed that it is imported in the waste form, and on that duty needs to be paid. So in such case, date of filing of bill of entry for clearing waste refuse for home consumption will be the basis of determining rate of duty. If goods manufactured in bond are cleared from the warehouse for home consumption, then import duty shall be charged on the quantity of the warehouse goods contained in so much of waste or refuse as is arranged for the operation carried on in relation to the goods cleared for home consumption. The relevant date for this is going to be the date of filing of bill of entry for clearance of goods manufactured in warehouse as per section 15 of the Custom Act. Question 5. BL Limited imported super kerosene oil (SKOA) and stored in warehouse. An ex-bond bill of entry for home consumption was filed and duty was paid as per the rate prevalent on the date of presentation of such bill of entry, and the order for clearance for home consumption was passed. On account of highly, remember SKOA, so it evaporates. The importer made an application to permit the storage of such kerosene oil in the same warehouse until actual clearance for sale use, and the application was allowed. When the goods were actually removed from the warehouse, the rate of duty got increased. The department demanded the differential duty. The company challenged the demand. Whether it will succeed, discuss briefly. Support of decide case law. So yes, this is similar case law is there. CC versus Bioco Lolly Limited, and Supreme Court held that duty on the warehouse goods is paid in out of charge order according to section 68. Okay, section 68. Further, section 49 of Custom Act. Remember, warehouse without warehouse. Okay, entire provides that imported goods enter for home consumption if stored in public warehouse or private warehouse on the application of importer that the same cannot be cleared within a reasonable time. Okay, so remember warehousing without warehousing. So basically duty is going to be charged according to this, not on the higher duty or lower duty. It is basically this. So let's say it is warehousing without warehousing, then whenever person is filing for home consumption, according duty need to be charged. And if it is warehouse goods, then of course date of presentation of the export bill of entry. Question 6. An importer having a received 100 casks of whiskey from Scotland by vessel, warehouse them in bonded place. Each cask is reported to contain 1000 liters. So there are 100 casks, each cask has 1000 liters, so basically 1 lakh liter you can say. At the time of removal of goods, it is found that 50 cases contained only 980 liters. The importer claimed that there has been a loss in storage and no duty can be levied. Explain the relevant provision of the Custom Act regarding storage of volatile goods and state with reason how would you decide the case. Remember section 70, evaporation. So according to section 70, if it fulfill that criteria, then duty can be remitted on such evaporation. The 20 kg losses into 50, correct, on 50 cases. So there is going to be 1000 kg, 1000 liter. 1000 liter out of 1 lakh liter. Question 7. Clearly mention the relevant date for the following case of goods warehouse under bond. Rate of exchange when goods are removed for home consumption. So when goods are removed for home consumption, then rate of exchange is always bill of entry presented. Okay, for warehousing. Remember when it is presented, bill of entry for warehousing means into bond bill of entry date for exchange rate. Rate of goods when goods are removed for home consumption. So when goods are removed for home consumption, then section 15 subsection 1 clause B, goods are cleared for home consumption, date of presentation of the ex bond bill of entry is going to be the date for determining the rate of duty. Rate of duty if goods are not removed from warehouse within the permissible period. So improper removal, then it is going to be the last date on which the goods should have been removed in relevant and not the date on which the goods are actually removed. So improperly removed. Question 8. Measure impacts imported some consignment of goods on 1/6/2017. A bill of entry for warehousing of goods was presented on 5/6/2017 and the material was duty warehouse. Okay. The goods were subject to duty at the 50% ad valorem. In the meanwhile, on 1/7/2017, an exemption notification was issued reducing the effective custom duty at the rate of 30% ad valorem. So when the goods were warehouse, when it is in the warehouse, government has reduced the duty from 50% to 30%. Impacts filed their bill of entry for consumption on 1/8/2017, claiming duty at the rate of 30%. However, Custom Department charged duty at the rate of 50% ad valorem, being the rate on the date of declaration into the warehouse. Explain with reference to provision of the Custom Act 1962, the rate of duty applicable for clearance for home consumption in this case, where the whether the rate of exchange on 1/8/2017 could be adapted for the purpose of conversion of foreign currency into local currency. So two things we need to explain. What is going to be the rate of duty? So here, because goods are warehouse, so what is going to be rate of duty according to section 15 subsection 1 clause B, date of presentation of ex bond bill of entry, correct? So when is presenting ex bond bill of entry, so which is on 1/8/2017. So on this date, rate of duty is 30%. So he is supposed to pay duty at the rate of 30%. Okay. Now the second question, which exchange rate? So now exchange rate section 14. Remember what I said to you when the bill of entry presented. Now, but here there may be two bill of entry. One for warehouse, another one for ex bond bill of entry from warehouse to home consumption. So I said to you people that in this scenario, there is going to be when the bill of entry first presented for warehousing. So whether you present for home consumption or warehousing, that is going to be the date for exchange rate. So we are not going to take ex bond bill of entry. We are going to take this entry only, whether it is bill of entry or into bond bill of entry. So when the importer is opting for home consumption, so he is going to file normal bill of entry. That is going to be the date for exchange rate. In case he is also opting for warehousing, so he is going to file into bond bill of entry. that is only going to be the relevant date. So 5/6/2017 is going to be the relevant date, not ex bond bill of entry. Question 9. Vipul imported certain goods in December 2017 and an into bond bill of entry was presented on 14th December 2017 and goods were cleared from the port of for warehousing. Assessable value on that date US dollar 1 lakh. Remember, he is going for warehousing since he filed into bond bill of entry. The order permitting the deposit of goods in warehouse for 4 months. So officer has given order for 4 months was issued on 21st December 2017. Vipul deposited the goods in the warehouse on the same day but did not clear the imported goods even after the warehousing period got over on 20th April 2018. Officer gave him permission for 4 months and after the expiry of this period he has not cleared the goods. So a notice was issued under section 72 demanding duty and interest and other charges because it is now improperly cleared. You are going to dim this. Vipul cleared the goods on 14th May 2018. Compute the amount of duty and interest payable by Vipul by removing the goods on the basis of the following information. Rate of exchange on this date, rate of exchange on this date, and duty is this. So assessable value is given $1 lakh. So we are going to take the exchange rate when he presented into bond bill of entry. Just now I explained. Okay, so he presented on 14. So 14 exchange rate is 65.20. So this is going to be the assessable value. Now the question come rate of duty. So rate of duty is basically this. No, because section 15 subsection 1 clause B say when he is going to present in case of warehouse goods ex bond bill of entry. Okay, so ex bond bill of entry basically presented on 14/5/2019. Actually date are incorrect. This is 18 only. This is 18 only. Okay. So this is going to be the date? No. Again no, because goods are improperly removed. Remember section 72. If period expired and you are not removing goods, then it is going to be say improperly removed. Section 72. So section 72 in that scenario say goods improperly removed, and in that scenario the rate of duty is going to be of that date. Okay. So that is going to be the date rate of duty because it's clearly written. Correct? So we have read this provision. Where any warehouse goods are removed in contravention of section 71, the license shall be liable to pay. And okay, this was licensee. Okay, where it is written. The proper officer may demand along with interest penalty in respect to if any owner fail, then he may deem fit where it is written that per date. So it is going to be dimmed. I forgot where it is the provision is written. So it's basically on that date only we are going to assume that it is improperly removed. So you can see that I have read, I think I have written somewhere. So on that date, rate of duty is going to be applicable. Okay, so in this scenario, the rate of duty is going to be applicable on this date when the period is expired. Okay, so when the period is expired, as on that date, that is going to be the rate of duty, which is 20th April 2019. So 10% plus 1%, 11% is going to be the rate of duty SWS. So this is amount of duty. Apart from that, he also supposed to pay interest. So he deposited on 21/12/2018. 90 days we are going to calculate. Beyond 90 days he is supposed to pay interest. So he made the payment actually on 14/5/2019. So 90 days we are not going to count. Beyond 90 days he is supposed to pay the interest at the rate of 15%. So March 10 days, April 30 and 14 days of May. So total 54 days he need to pay the interest on the duty amount, which is going to be 7,17,200 into 15%. Okay, divided by 365 into 54. So 15916. Enumerate the circumstances under which goods are considered to have been removed improperly from a warehouse under the Custom Act. So section 72. And if suppose it is not written in the provision, I remember it is written, but you note down in section 72 that going the rate of duty in case of improperly removed is basically when the period is expired. Okay, so note down there so that you don't do the mistake. Question 11. If manufacturing operations are carried out on warehouse goods and finished product are cleared for home consumption, then appropriate duty of custom should be levied on the quantity of the warehouse goods contained in the waste or refuse arising out of manufacturing process. So you need to examine this statement. So this is basically valid statement according to section 65. So thank you very much. This complete warehousing chapter. Okay, bye bye, all the best.